I'm glad this story came out yesterday as opposed to April 1st. Yesterday was March 31st of 2022, and that marks the day that the New York Fed was legally required by the Dodd Frank Act to release the names and amounts of institutions it made emergency repo loans to in the first quarter of 2020. The Fed's required to release all the information and data 2 years after it made the loans. And they complied. With some of it. Let me explain. Do you remember in January of this year, we told you the largest borrower in Q4 2019 pre-pandemic was a Japanese investment bank, Nomura Securities. They had a total of $3.7 trillion in borrowing from October through December of that year. Now, this was from the Fed, compiled by Wall Street. So, when you have a Japanese bank in the last quarter of 19, you got a lot of banks who are like, hey, we're people too. We're not just we're better than the Japanese. And that was a security. That's like Charles Schwab. That's not really a bank. That's somebody that's helping you buy stocks and bonds. And they got behind the eight ball just a wee little bit of $3.7 trillion in December, or the fourth quarter of 2019. Well, there was another bank, and this time, the French are proud, There's a French conglomerate, a BNP, and it says, hey, we are not going to let Japan make us look like we're not out of control, huh? BNP borrowed $3.84 trillion from the U.S. Federal Reserve, taking advantage of the 1, 14, and 45-day term loans. Now, the Fed's data released yesterday is weird. It only has released what they gave to these foreign banks and the money they printed for these banks, but they just couldn't. Where did I put the data on how they paid it back? Did they pay it back? We don't know. Okay, we don't know. It was an emergency. Who writes things down? Now, if you've been a listener to the program and reader on the Blaze for a while, the name BNP might sound familiar, but you have to go back into the time tunnel. Back in 2015, I reported that BNP had pled guilty to conspiring to violate the International Emergency Economic Powers Act and the Trading with the Enemy Act. And they paid $9 billion in fines to the U.S. Department of Justice. This is the largest fine a foreign bank has ever paid to the Department of Justice. Now, I covered that story 7 years ago because of the trading with the enemy part. Wait a minute. BNP was found to have helped launder tens of billions of dollars in illegal funds from nations under the security sanctions, including Sudan and Cuba. But the real reason I wanted to let you know about it was not Sudan and Cuba. It was because BNP was the primary money laundering customer. Iran. They were the go-to. Hey, how can we get these arms out, and how can we, launder all this money? Oh, we are here to serve you. We are French. We are French. Be our guest. Be our guest. So they were just off being identified by the U.S., U.K., and EU authorities of being the world's largest state sponsor of global terrorism. Iran, like Russia recently, sanctioned with being cut off from the world's financial system, including SWIFT. Now, I don't know if you remember this. In 2014 and 15, the British Navy and the Israeli Defense Force captured and boarded a couple of Iranian ships that were carrying rockets and mortars and thousands of firearms to be delivered to the Palestinian terrorist organizations. Remember that in the Gaza Strip? Yeah, it was BNP that was helping them do that. Anyway, they continued to help them, and Iran just reached out to BNP because they said, hey, be our guest. And what they did is they helped them sell weapons and oil all around the world by funneling the transactions through Cyprus, Cayman Islands, and then finally to U.S. banks, which is weird because that's the exact route that Hunter Biden's payments went to help dear old dad. So they paid $9 billion. And then in 2020, they needed $3.8 trillion in emergency loans just to stay afloat. And let me give it again, $3.8 trillion. Did they go to the IMF? No. The World Bank? No. The EU Central Bank? Because that would be the bank that should do it. No. No, they came running to Uncle Sam to bail them out. So they got that $3.8 trillion. It's good for an investment of only $9 billion that they paid us. You know, hey, we'll scratch your back. You scratch ours. Give us $9 billion because you were trading with the enemy, and we'll give you $3.8 trillion. I mean, I think that's a pretty good deal. Now, let me go back. Remember I told you Nomura Securities, like the Japanese Charles Schwab, and in December they needed, what was it again, Stu? It was 3.84. Okay. No, wait. No, that was the other one. Oh. Anyway, it was like, yeah, here it is. $3.7 trillion they borrowed the last quarter of 2019. That should take care of things, right? No. The very next month, they needed another $2.7 trillion. So the Japanese, one securities firm, needed 6.4 trillion brand new crisp dollar bills. And you add that to the French and you've got 10.5 trillion. Okay, two banks. Those are the ones we know about because we had to be told about them because of Dodd Frank. That is really nice. That is really, 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 really nice. By the way, do you know how much leverage the Fed has over foreign governments, institutions, financial markets? Do you now get why stocks and equities just don't ever seem to go down no matter how bad the news gets? Who's propping up those markets? You know, who's doing that? I just can't figure it out. By the way, the Federal Reserve is the largest creditor in the world. That's a gross understatement. If you want to understand what comes next with programmable Federal Reserve digital currency and the Fed's outright promotion of ESG systems, yeah. Do you think these countries are going to say no to us about any of that when we've loaned them all? And when you look at the price of meat and you wonder, why is my dollar not going so far? Yeah, it might be that. The official balance sheet now of the Federal Reserve says they own $9 trillion. You're going to love this. In mostly mortgage-backed securities. Isn't that great? $9 trillion. And since the pandemic, some unknown quantities of private securities like corporate bonds, but we don't know. And that implies since 2008, the Fed has only injected $9 trillion by printing currency and buying assets. If we really want to understand what's driving inflation and how deeply the Fed has embedded itself in the global financial system, you have to understand the size and scope of these loans. They're not part of the Fed's balance sheet, okay? Not part of it. And you know what's really weird is I didn't know that the Fed began buying stocks. Did you know they were buying stocks? Yeah, they have BlackRock helping them invest their money. This is why our country is upside down financially. This is the game. And then we listen to people like the CEO of BlackRock, who just yesterday was saying the arrogance of some Americans, these younger Americans, they've never really seen trouble and they should brace for it because there's really bad financial trouble. the likes of which we've never seen, and I'm not sure that Americans are strong enough for it. You piece of garbage. You're the ones that are raking in the cash. You're the ones that are raping the Federal Reserve. The Federal Reserve is now partnering with you in the Great Reset because that's the net you want to catch all of us in. We can't afford housing because you buy up whole neighborhoods at 50 to 100% more than the asking price. And you telling us, you're warning us that times are going to get tough. Oh, thank you.
This sort of reminds me of a period in my life, Glenn, when I got a credit card and I maybe put some purchases on that credit card.
Right.
Yeah. And then I thought I should get another credit card because if you have that first credit card, it gets filled up. You can't use it anymore.
Correct.
So you get a new credit card and then you can buy things on that. And when I got that second credit card in the mail, I got these things for my convenience.
For your convenience.
Called convenience checks.
Holy cow.
Now, convenience checks, that sounds incredible.
It's so
how
convenient.
Convenient was it? It was very convenient. Because what I did with the convenience check is I wrote it out like a normal check, and then I wrote it to the other credit card company to make the payments on that card.
So you paid off. You were responsible.
I paid off.
You paid it off. Good for you.
And then I noticed that the apartment I was living in was requiring a payment monthly for me to stay there.
So you paid for that with a convenience
check.
Oh, my gosh.
Because it was so convenient. It was much more convenient than having the money to pay for the bill. I would just take these convenient checks, and then I would never have to pay. And then you know what I did? I opened another card, and then they sent me convenience checks too.
Holy cow. You know what? We're up against a network break, but I don't think I have to ask you how this all ended.
It was convenient. Well as it was very convenient. And it's going to turn out as well as it is for America.
Really?
Yeah.
Oh, well, thank you for bringing us into the weekend on a Friday with that happy news. America, all you need is a Fed convenience check.